All right, accounting three, here we are. We're going to do 14.6, which is calculating and recording federal income tax. So our objectives here are to close out our worksheet for our merchandising corporation and then calculate our federal income tax. Now, remember what we're doing here is we're closing the books out for the entire fiscal year. We have end of fiscal period, which is the end of fourth quarter. So not only are we at the end of the month, we're at the end of the quarter, we're at the end of the year. And what we're doing here is closing out the books for the month, the quarter, and finally the entire year. So this one's messy. I just want to warn you up front that it is messy because you have to take a couple of steps back, do some additional calculations, and then complete again based on what you're going to get for your net income. So we've got to do a couple of different net income calculations. We also have to extend all of our balances over to the income statement and the balance sheet sections of the 8-column worksheet. So what I'm going to do is I'm going to walk you through the chapter material real quick. Then we're going to go through the lesson presentation. And then I'm going to demonstrate on ACCIII how to do this. Your assignment this week is this one assignment. That's all I'm asking that you do, since this is going to take you a little while. So I've given you the answer key to the work together problem, which I'll use to demonstrate. And then I'm going to turn you guys loose on this. So let's go ahead and get started. All right, so here's the textbook. I've included these sections for your perusal. That way you don't have to mess around with the online copy. So remember when we did our taxes in Chapter 13, we have to file quarterly estimated taxes, okay? If you got $500 or more, according to the book, it's a little different now. You can look it up if you're interested. But you've got to pay them at the end of each quarter, and it's due 30 days, at the 15th of the month following the end of your quarter. So first quarter is due on April 15th. Then you got to pay it again at the end of June. That one always hurts businesses. And then you got September and December. So in that first quarter, remember what you've got to do is you've got to make up anything you underpaid fourth quarter on April 15th. So this is first half of the year kind of is tough for small businesses especially. So, but what I'm going to do is teach you how to keep yourselves out of trouble with the IRS by keeping the books and then making sure you're going through step by step on how to do this right. So according to our calculations, our simulated company Hobby Shack estimated there was going to be $18,000 due for the year in federal income taxes, and that's payable in installments at the end of each quarter. So we're going to guess what our revenue is going to be. And that's the thing about this is you've got to guess what your revenues are going to be at the beginning of the year and then make up anything at the end of the year. Seems kind of like a rigged system to me, but that's the IRS at work. If they can find a way to gouge you for underpayment or overpayment and then stick a penalty on that, they're going to do that. So we've been recording and filing on our Form 941 our quarterly estimated. And remember at the bottom where you've got to go through and you have to keep a running total on that filing of how much you've already paid in and then how much you're paying for each quarter. All right, so that's where this becomes relevant. So we've got our tax expense for taxes we've already paid, and we have our income tax payable, which is the liability for what we still have to pay. So this is a current liability, meaning we have to pay that within the next 12 months. So what we're doing here is we're taking care of all the accounting on that. So step one in this process is to complete all the other adjustments on the worksheet. Let me flip over to ACCIII. I've gone ahead and taken the liberty of pre-filling all this. Well, that's the key. So, I'll go over to my version here in a second. ACCIII. There we go. I've taken the liberty of going over here and pre-filling this with just a few exceptions, and we'll get to that. Okay, you've got to go through and you've got to move everything over to the balance sheet side and then to the income statement side. Okay, but you don't want to do your totals yet for anything, just to kind of warn you how this works in practice. Okay, there's a lot of holes left in this, but the bulk of this is carried over just like we did in Chapter 6. You just move the stuff to the right. Okay, you guys are smart. You can figure this out. It's just making sure you do the math right. Make sure, though, see, here's the thing I mess up on. I got to keep a close eye on this because I want to put this information here in the debit column. So make sure you're entering it in the right space on the worksheet when you do it. And if you have anything that you have to make an adjusting entry, make sure you're doing the right math. Okay, normal balance here on an asset's a debit. Make sure you're entering in the right side, but these are credits. Make sure you're reducing the balance. This minus this equals this. I'll say it again. This minus this equals this. Now, in this case, remember our allowance for uncollectible accounts that we just did? This is a credit. So it's this plus this equals this over here. You got to record this stuff in the right columns or else you're going to lose your minds. I was nice again, and I gave you a spreadsheet, once again, with the formulas already plugged in. So you shouldn't have to worry about any math errors, all right? But you've got to make sure your math is done correctly here to here, okay? That's it, and you got to make sure it's entered into the right column, all right? So I took some pity on you because this is just so messy, and I'm not here to walk you through the process and help you out. All right, so let's go back to the chapter. Okay, here's the math on this. What we have to do, once we get everything carried over, is we have to calculate the net income before income taxes. That last line here on, that last line here, this is messy. That last line here, the last row, we leave blank. Federal income tax expense. We do not carry this over from the trial balance because we're not done with it yet. We're doing the end of year reconciliation on this, and we have an additional quarter we have to pay. So we got to figure out how much we owe this quarter before we carry anything over. So what we are doing here is we are looking at our total revenue. Okay. This is okay to use. Okay. We total this column, but then we total the debit column here without any calculation for our federal income tax expense. So that's what our book is showing here. And let me pull this back up. It's going to be a mess. Okay, I'm just going to pull this up at this point. So our learning objectives here: plan and calculate federal income tax, complete the worksheet for a merchandising corporation. So we're planning this, and here's where we were in the book. So the total income statement credit column, which is this one here, this column here, right? We sum that. And then we sum the column, this, without the federal income tax expense included in. Okay, we've also got this fellow up here we've left blank. We have the liability that we haven't calculated yet, and the expense we haven't calculated yet. So the implication here is we're going to have to run this and then run the math again on our adjustments column, which is going to impact our income statement debit column here, and it's going to change our total net income before and after. All right, but what we got to do now is we got to work with what we've got. Okay, so here's the math on this. This is the income statement credit column. This is the income statement debit column. And this minus this is simple math. This is our net income before federal income tax. This is what we owe tax on for the entire tax year. Okay? Now, that's messy, but here's where it gets really messy. We have in this country something called a progressive income tax system, whereby what it really means is the more you make, the more you pay. I don't understand how taxing people for success is indicative of progress, but that's the way it works. I mean, realistically, it seems that we should be rewarding people's success rather than punishing them, but that's the way the tax code works, and that's what our political leaders have decided we do. What I find interesting here, under the current administration, the tax code has been revised to adjust these numbers down. And if you want to look to see what it is, you can, but it really helped spur the economy before our current lockdown because these brackets, that's what these are tax brackets, have been reduced to 25% for corporations, and they're down to, I think, 36% is the highest for individuals, whereas before it was ridiculous. It's just obscene what the progressive tax structure is. So anyway, based on what's in the book, and it's a little out of date, this is the way it works. So you can't just look at your income and plug it in at the highest rate. And I'm going to go back to the book at this point since this is a little cumbersome to work with. Okay. So we're going to go down here one page and we're going to take a look at this. So we've got $104,000 and change in net income. That's what's left over after business operations for the year. But we can't just plug this in right here. See, we've got at this level of income, you're taxed at 15. At this level of income, you're taxed at 25%. At this level of income, you're taxed at 34%. And at this level of income, you're taxed at 39%. You can't do that. It doesn't work that way. You can't just take 104,000 and multiply by 0.39. No, it doesn't work that way. What you have to do is you have to take that first $50,000 of income and then tax it at 15%. Then take the next $25,000 in income and tax that at 25%. Then take the next $25,000 and tax that at 34%. And finally, that top level, that residual $4,500, you've got to tax at 39%. Now, isn't this interesting? The next tier drops to 34%. I'm trying to figure that one out. That looks like little crony capitalism there, where if you're a big corporation, not just a medium size or a small one, you get a break. How does that work? How is that progressive? I'm trying to figure that one out. Okay. So here's the math on this. First 50,000 is taxed at 15. Second, 25,000 is taxed at 25. And here's the product of that. So it's simple math where you convert this to a decimal and you multiply it. So third tier on here, 25,000 times 34 is 8,500. And this is where you gotta subtract. I mean, if you have more than any of these, you just plug in the full value. And you can set up a spreadsheet, which I have done to help you calculate this. So let's go over there. So I've included this in your resources. So when you figure out what the net income is, you can just kind of go through and plug this in with the effective tax rate in the book, and it'll calculate it for you. Now, what I've done here is I'm kind of keeping this real a little bit. What I've done here is include an extra formula for what the actual effective tax rate is across the board. This way, you know exactly how much you're really paying for next year when you go to estimate what your tax liability is going to be. So this is just meant to obfuscate. This tells you exactly what you need to know. We're looking at a realistic effective tax rate of 23%. So based on this year's income of 104, for our working model, boom, $7,500. It's done for you. Here's the formula. So it's simply this times this. And what I've done here is I've converted this to a decimal, 0.15. So Excel just does the work for you. All you have to do is plug in the different income level, and I've done this as well. So let's say I'm up here. Yeah, just to demonstrate. Okay, it does the math for you. That's not accurate because we haven't filled out a $335,000 here, but just to show you it does work if you want to go through and experiment with this a little bit. I love Excel. It's the accountant's best friend, and I hate the fact we haven't been in class for 2 months because I wanted to teach you some of this for real. So anyway, you can use this or not. It's up to you. So let's go back to the book here. So what you end up doing is you take your net income before tax total and you derive a figure, okay? So total federal tax amount due is $23,899 and change, all right? That's what we end up with. So what you then have to do, pay attention here, guys. We have paid $18,000 of that already. Okay, we owe the remainder between this number here $518,000. So that works out to $5,889.24. So what we have to do is we have to then make this H in our adjustment. So we go up to the top here, federal income tax payable. Let me go back to ACCIII and show you where that goes. Right here. Whoops, that's the answer. Wrong one. Okay, we go there up on our asset side, and we enter the remaining payable amount right here, income tax payable. And then we go down to the expense side, federal income tax expense, $5889.24 here. Okay, then what we do is we carry those over to the balance sheet side, and then we carry them over to the income statement side. And then we go through and we finally do our totals for the worksheet at this point, okay? So once we get that, then we can go through and do our totals here, and we can do our totals here, because we can't sum our adjustments here and here until we get this number in. We can't sum the balance sheet credit until we get this in, and we can't sum the income statement debit here, and we can't calculate our final net income until this last step is done. So there's a lot of moving parts here, and you just got to sequence them right to get this, okay? So this is where we are. Once we do that, we pull our totals down, we add our net income, we verify equality of debits and credits on the income statement side, we verify equality of debits on the balance sheet side, we extend our net income over to the balance sheet to get that final number. That's where we are, okay? You can look at careers in accounting. We're going to do that in another week. And this is what the completed worksheet looks like. I'd rotate it, but, you know, I'm not going to bore you any more than I already have. So there's another way to do it on the 10-column worksheet that has the adjustment columns here that runs the tax calculation for you, and you plug it back in, but I'm not going to teach you that. That's just something else to extend the video here. So let's go through and let's show you how to do this in practice. I'm going to bump over to ACCIII, and I'm going to finish this thing off. All right, here we go. So here's where we are. I've extended all the balances over for the balance sheet section as well as the income sheet section, income statement section, okay? Again, notably, what's missing is the income tax payable liability, and then what's missing here is the federal income tax expense, and also what's missing here is the adjusting entries total, the total for the income statement columns, and this is the total with what I've got right now for the balance sheet. And I think I may have pre-filled this prematurely, so I'm going to bump this one out because we're not there yet. Okay. All right, so what we have to do now is I've gone ahead and pre-calculated the sum of this plus this plus this, and that's $859, $940, $34. So you'll notice that I provided this on the Excel spreadsheet. I've got this column here. You know, you're going to have to run the math on it, but I've got the way to do the proof down here. Okay, so what we're going to do is we're going to plug in 859, 940, 34 right here. Okay, that's done. We're done it. But now we've got to go back and we've got to add the income statement debit side total. We don't have it here, but we go with what we got, remember? So let me get the math here on this real fast. All right, so what we've got here right now is $700,000. Okay, notice I'm not entering it up top. Notice I'm not entering anywhere here. I'm entering down here on our mini worksheet. Okay, when you're doing this for real with the IRS, they just love all these little mini worksheets that you've got to file with supporting schedules. And, you know, you need to do it. So this is good training for that. So 714, 284.40. So this right here minus the sum of the income statement debit column as we have right now works out to $145,000. $655.94. Okay, so that's our net income before taxes. Now, here's something that they're not necessarily going to that's not in the book that you need to know. When you're looking at the financial statements for a company, you'll hear stuff like EBITDA, earnings before income tax and depreciation and allowance, EBITDA, EBITDA, and that's what it's called in financial circles. So literally, that's this number right here. Okay, earnings before income tax and depreciation allowance. Technically, this is EBITDA because we've already done depreciation here. So this is EBITDA. So this is EBITDA, not a beta. But those are financial numbers. They want to see, a financial analyst wants to see what your raw earnings are before you've got to pay taxes and before you depreciate your capital equipment. So if you're at a point where you got all sorts of capital equipment you got to depreciate, that's great for now, but it means you're going to have to replace it soon. It means your earnings may be overinflated because you are at the end of the life cycle on a lot of the stuff, and then you've got a lot of outlay. Okay, but here's the other thing. If you got a really good year and you have a ton of income where you have severely underestimated what you paid, well, guess what? You need to go buy some equipment. You need to go buy some assets. You need to go buy some store equipment, office equipment, some company vehicles, okay? Because what you're doing is you got a whole bunch of new expenses where you can go out and add those expenses and you can reduce your tax burden. Okay, IRS knows this. They recognize this. It's okay, because what that means is that you are reinvesting your income in your business, which according to the IRS means you're probably going to be around for a while and they're going to be able to tax you for a very long time. IRS takes a long view. They want you to be successful because you are a long-term source of revenue to them. So they allow that. Everybody just keep that in mind for real business purposes. Okay, so back to this after my little sidebar there. So, all right, so what do we have here? We got first, let's go to problem here. I need to see what our tax rate is on their first 15,000. All right, so 15% is our rate, just like our model. And our tax on that, lo and behold, is $7,500, just like my model. Then the next 25,000 is taxed at 25%, just like my model. So $6,250. Okay. And then the next 25,000 is taxed at 34%. That's just gouging you. You gotta, and they're taking a third of everything you earn. For what? Okay. Tax on that next 25,000 is $8,500. All right. So then here's where we have to do some thinking on this. So what is the remainder? Well, what do we have left? We have $145,655.94 remaining. Okay. So this is the way you do this. So our total net minus 100,000, which if you add this together, it's 100,000. Makes the math easy. So what we do here, this, which is our total net income, minus what we've already paid taxes on, which is 100,000. 50 plus 25 plus 25 is 100,000. Okay, leaves us $45,655.94 in untaxed income at this point. Tax rate on that is, get ready for the hit, guys, 39%, and that's $17,805. 82 cents. Correct that. Oh, this is cumbersome. 17,805. Okay. So we then add the column. What do we get? Well, we get our total tax liability of $40,055.82. So guys, let's go up here. We estimated our total income tax expense would be $40,000. Whoever our accountant is, they need to be hired again because that is awfully doggone close. So what is our unpaid tax liability that we have not planned for? Again, remember the objectives here was planning federal income tax. So what we now have to do is we go up here, payable. We owe an additional $55.82. Okay, and then we enter our tax expense, the additional tax expense of $55.82. Now we can complete our worksheet. So we carry this over, 55.82. We go up here and we have to carry this figure over here. So that's a credit, 55.82. Now we can go through and finalize our totals. So moving back, so 368,601.46 is right. So now we have a total of $263,000 and change. Okay. Our sum here is $41,377.22. And yeah, I did the math on this before, so I didn't want to waste your time with you guys watching me punch numbers into a calculator or a spreadsheet. So I just went ahead and did this already. Okay, this is correct. Now we carry this over. So it's actually 40,055. Okay, keep me honest. Okay, $40,055.82. Okay, now we go back and sum this again. So our total expenses, including our federal income tax expense, becomes $754,340.22. 754, 340.22. Work with me. Okay. Now, remember our net income before was $145,655.94. We have to rerun the math. This minus this now becomes $5,600.12. So this is our actual net income. That's what we get to keep. That is the remainder after all of our expenses as a company or have. That's the actual net profit bottom line. That is the real hardcore bottom line here, guys. This is the number everybody wants to get to. We then extend it over to our balance sheet side. And then we rerun the math. Make sure I got everything completed. So, at the end of the day, the year, the quarter, the month, 859, 940, 34. And that just so happens to match this, doesn't it? So we pull this down, 859, 940, 34. Then we are going to bring our number here down, and then we're going to see if our last column total matches. Okay, let's see if it does. So 368, 601, 46. A match. Looks like it does to me. Okay, guys. That is 14.6. Again, strongly encourage you to use the Excel spreadsheet. If you absolutely want to inflict punishment on yourself and you want to use the PDF versions of the workbook, you go right ahead. But I've tried to make your lives as easy as I can make it by putting this together, giving you the example, then putting together a worksheet with the formulas. But again, I caution you, pay attention to this, okay? Make sure that when you get to the point where you've done everything on your income statement side and your balance sheet side, except for calculating this, use this mini worksheet. And then go through, and then you have to use the table to calculate what your actual tax liability is. Again, I recommend you use the Excel spreadsheet I provided for you. Then you go back and you do your sums. You prove equality of debits and credits, and then you rule it. Okay? That's what I've got for you today. That's all you have this week. We're going to jump into chapter 15 next week, which is preparing the financial statements. That's easier. That's light work compared to this. It's just there's a lot to it. We've got an extra financial statement we need to do this year, which is the stockholders' equity statement. So we'll do the balance sheet, the income statement. They're not much harder than Chapter 7 was. So anyway, have a good I hope you had a good Memorial Day weekend, and I will see you at the Zoom meeting on Tuesday. Bye.